Hi, welcome back to my channel. Thank you so much for clicking on this video. In this one, I want to talk about the macro environment and how that affects Bitcoin and my outlook on the overall Bitcoin market. We're going to talk about the Bitcoin fundamentals and what does that mean for the price. We're going to talk about multiple macro indicators like the US interest rates, unemployment rate, jobless claims, and the S&P 500, and how all of that really affects Bitcoin and what could we expect for these indicators to be in the near future and how they could affect Bitcoin. We're also going to talk about the US presidential elections and how that could also affect the Bitcoin price. So stick around in this video. I'm going to talk about all these things. Please like and subscribe and give me your feedback, any questions, anything you'd like to talk about. I can answer it in the next video or straight up in the comment sections. Thank you again for the support and enjoy the video. So, first things first, I want to talk about the fundamentals of Bitcoin as it is. This is the Bitcoin chart, obviously. And before we really get into all the macro analysis of the entire economy as a whole, let's first talk about what is happening with Bitcoin. So, Bitcoin is basically out of the bear market, obviously. I mean, we've endured the bear market back in 2022 and 2023, and by the second half of the 2023 year we started going up, and by the time we reached this phase over here, this is when the ETFs were getting approved, and they got approved, and then we rallied all the way up from 2006, from $26,000 all the way up to around the all-time highs, which were around $73,000. And ever since that rally, and when we entered 2024, like 2 or 3 months in 2024, we started shopping, and we've seen all this shopping in the Bitcoin price in the range of between 70,000 and around, we've reached like the lows of $53,000, and we've been in this range for almost the entirety of 2024. But in 2024 we've entered a new era in Bitcoin, which is the halving, a new halving era, which historically it has been a bullish thing for Bitcoin. Like every 4 years we have the Bitcoin halving, and we've seen the Bitcoin price goes up after every halving cycle. And some people argue that this is kind of a coincidence and it's not necessarily what will happen again. But I don't know. I mean, it's basic economics. When you have a certain supply and the certain supply gets slashed in half on a daily basis, it's kind of an indicator that we might see a supply shortage. And now, obviously, this is not the only factor. This is not the only supply that gets into the Bitcoin market. You have all these big sellers, the whales that are selling, that they can also increase the supply of Bitcoin that is ready to be bought on the market. But still, the miners, the Bitcoin miners, are one of the biggest sellers of Bitcoin because they need to do so to finance their operations. And suddenly they have less, they're mining less Bitcoin because of the halving cycle. So they're mining half of what they used to have in terms of Bitcoin. So that could mean that they can sell less. And so this could trigger some kind of a price increase, some kind of a bigger demand and the less supply. And this could mean higher prices on the long run. So we're still kind of expecting that this halving cycle and price appreciation every 4 years will still be applicable, and it will not break this time around. But we're yet to see. But it's part of the fundamentals of Bitcoin and why Bitcoin keeps going up, because it's deflationary by nature instead of being inflationary. The daily supply of Bitcoin keeps getting slashed in half every 4 years, and that's really important for the price of Bitcoin and our expectations of what could happen in the future of its price. Now, if we're gonna enter the first thing about this macro outlook, I like to look at the S&P 500. It's pretty obvious that Bitcoin is kind of correlated to the S&P 500. I don't fully subscribe to this idea because Bitcoin outperforms the S&P 500 in terms of a bull market, but also it really underperforms in bear markets. So it's kind of like the S&P 500 but on steroids, because you can see that the S&P 500 is going up, and it goes up usually like a few percentages on a year to year. Like it has an average of 7% year on year, and during bull markets it goes up by a couple of digits percentage, but Bitcoin goes up in 3-digit percentages during the bull market, but in the bear market it goes down. Now we see the the S&P 500 is in price discovery. It's hitting new all-time highs almost every single day, and it's been doing so since the start of 2024, you could say. It's been hitting new all-time highs on a weekly basis, and with bumps along the way. And now it's hitting a new all-time high. And usually what happens is that the Bitcoin price follows what's happening in the S&P 500. So as we can see now, S&P 500 is going up. That means Bitcoin could probably follow it in the near term, medium to near term. Now, another asset that Bitcoin is highly correlated to is gold. Obviously, all of us say that a lot of people have this narrative that Bitcoin is digital gold, and usually gold really performs very well in times of uncertainties and in times of war. As we see that right now, we have the war in the Middle East and the war in Russia and Ukraine. This is like a signal for investors to put more money in gold. So usually as well, just like we see in the S&P 500, when gold it's going up, Bitcoin tends to follow it. And also gold has been in price discovery ever since the start of 2024. It has reached a new all-time high, and we've been seeing it's been reaching new all-time highs on a weekly or even a daily basis. We're seeing gold performing very well, and especially since the situation in the Middle East have aggravated. We're seeing that gold is going higher and higher. And that's usually a good indicator for Bitcoin, because Bitcoin tends to follow what gold does. So this is what's happening in terms of S&P 500 and in terms of gold. Now, one of the most important metrics in the entire macro environment is something people keep talking about day in and day out, and that is the infamous US interest rate. We have been seeing interest rates going up for quite some time, since the early 2022. It's been going up. We've been seeing and enjoying 0% interest rates for the last from 2020 up until 2021, late 2021, and by early 2022, the Fed policy have changed, and we've been seeing an increase in that instead, and it increased from 0% all the way up to 5.5. And back in September, we saw that interest rates were cut for the first time in two years, from 5.5% to 5%, and we're expecting for the rates to keep going down. We have the next Fed meeting on 7 November, so exactly a month from now, and the expectations to cut around 50 basis points is at 93%. So the market already expects we're going to see we're going to see that the Fed is going to cut interest rates at around 50 basis points. And you could say that it's kind of getting priced in the market, although I don't believe in the theory of pricing in. I don't believe that the market is capable of pricing in events that have not happened yet, because the market is not really efficient in that sense. So some investors try to be ahead of these events, but most investors in the market, they tend to invest after the fact, after they see all the money that gets poured into the market, because usually when you have lower interest rates, that means we have more liquidity in the market. So not until the liquidity actually becomes available to be invested in the hands of the investors, the money will not flow in. So you can actually put more money in the market in the anticipation of a rate cut, but not before the rates are actually cut. You can actually invest that money in the market. So the liquidity in the market takes place once the rate cuts actually takes place, and the money gets in the hand of the people that want to invest it. So this is what we're seeing in terms of that. Now, one other thing that really shows how much liquidity there is in the market is the federal deficit. So we're seeing like deficits like no before. We're currently at $1.69 trillion deficit, and we've never seen such federal deficits in the history of the United States. So the government is running these deficits because for quite some time the market was only seeing higher interest rates, so the liquidity was low in the market. So the government had to step in and issue all this deficit in the market. This is basically debt that the US government is accumulating. So this is also something that allows the market to have more liquidity, and thus risk assets such as the S&P and Bitcoin would go up in price, because all excess money in the market gets invested in risk assets. Another important metric that people keep talking about is the unemployment rate. As we can see, ahead of the latest rate cuts, we saw that interest rates were ahead of the rate cuts. We saw that unemployment rates were going up, and as soon as we saw the first interest rate cut, there's some kind of a retracement in unemployment. And as you can see here, these are the lines that show when unemployment kind of surpassed its moving average. So every time it did so, we saw kind of a recession. This one was back in 2008, and we all know what happened in 2008, the infamous financial crisis. And here we have the infamous COVID crash, COVID recession, which also led to this huge peak in unemployment, which is also like a black swan event. Here we might be seeing the same thing, but I'm not really convinced that this will hold, because it seems like the Fed is trying to front run this and try to keep it down. And also, one more important metric that shows unemployment is the jobless claims. So jobless claims is more important than unemployment, because this is when people actually lose their jobs and file for claims, whereas unemployment is more like people entering the job market and still haven't found a job. So this includes the people that actually got laid off and they're out of a job. And this is more of an indicator of how the economy is doing. So if we see a huge increase in jobless claims, that could actually mean we're at the brink of a recession. But so far, it's still very low in comparison to other recession times. We're still at around 225,000 jobless claims. And yeah, I mean, in 2007, we were much higher, which led us to this huge run up until we reached the peak of 600,000 jobless claims. So we're still at only 200,000. And yeah, I feel like we're nowhere near that. So this is yet another macro indicator that shows that, yeah, we're probably not in a recession as of yet. This is something I want to talk about also, and this is also something specific to the Bitcoin or crypto market, and not as much as it is a macro indicator, which is the Bitcoin dominance chart. Currently, Bitcoin sits at around 58% Bitcoin dominance, which has been going up for quite some time, from the early 2023 up until now. We've been seeing this number just grinding up, and usually when this number reaches a peak, this is when the Bitcoin euphoric bull market starts. So last time it reached a peak of 73%. I feel like this time around it will not reach that peak. It will be somewhere around the mid-60s before we see a drop in the Bitcoin dominance. And that means like all the altcoins are rallying against Bitcoin, especially stuff like Ethereum and Solana and stuff like that. But when we reach that, it means that we reached the Bitcoin euphoria, and it's probably the peak of the bull market. So here, when we dropped all the way to 40% back in April 2021, that was effectively like the peak of the bull market and the peak degeneracy in all the altcoins and the meme coins and the shitcoins. This is when all of this was happening. These things were rallying, and you can just buy Dogecoin and become a millionaire out of it. But right now, it's much tougher for all these altcoins and the shitcoins and the projects. And Bitcoin is just gaining momentum against all these projects. And I don't know if history tells us something here. I'm not a big fan of altcoins, obviously, as you can know on my channel. But I will not say that we will not see an alt season. I mean, it's just human nature, and it will happen again. I don't recommend anyone to get into altcoins and to get into gambling, but it's very important to look at this chart, to monitor this chart, because it tells us something. One more thing I want to talk about that captures the macro environment is this presidential elections, the US presidential elections. And this has been by far one of the most uncertain elections in history of the United States. And this is probably why the market is a bit cautious. So we don't know if Trump is going to win or Harris is going to win. So this is why the market is not acting before we get some kind of a confirmation on who's going to win. Obviously, in the early of November, we're going to know who's going to win these elections. If we think Trump is going to win, this is obviously better for the market and for the crypto market, so to speak, because Trump has been labeled as the Bitcoin pro-Bitcoin candidate, whereas Harris and the Democratic Party hasn't been very hospitable towards Bitcoin and cryptocurrencies. And usually Trump's administration promises lower interest rates, more open markets, favorable markets for US stock markets, and higher spending, so to speak. So I think Trump presidency will give us a better market. That's what most people think probably in the market. And so because of this uncertainty right now, people are just waiting for what will happen, who will win this presidential elections, and probably after that we will see some kind of a rally, whether to the upside or to the downside. It's just dependent on who will win this election. So people tend to be cautious ahead of the elections, especially when it's that close. We're seeing the odds being flipped back and forth between Harris and Trump, so it's not really easy to tell who's going to win these elections. Lastly, I want to say that usually the summers in Bitcoin are bad. They're usually bad for Bitcoin. So we've seen the summer of 24, it's been going down for the most part, or shopping. And in the summer of 23, it was going sideways and down for the most part. And in the summer of 22, same situation. Only in the summer of 21 we saw the price going up because we were in a euphoric time. But usually summers are bad, and Q4s are usually good for Bitcoin. So this is what we're counting on after the presidential elections are done and the uncertainties are behind us. We might see some kind of a rally in Bitcoin. So this is what I'm anticipating overall in terms of the Bitcoin macro. I will probably do an updated video on that sometimes in the future, maybe next month after the Fed meeting, and we will talk about what will happen next or what our expectations are. Thank you all for the recent support on the videos, and I'll see you in the next one. Goodbye.